Are Korea's latest economic developments signaling a massive structural shift, or just short-term noise? It's Monday, June 29th. Let's get into one of Korea's top economic stories today. For you, the international professional, our mission in this deep dive is pretty clear. We're tracking Korea's biggest structural story using today's Seoul Economic Daily reports to separate the signal from the noise. Okay, let's unpack this. Is Korea actually building its industrial infrastructure at the speed it claims?
Well, they're certainly signaling immense ambition on that front. Just to put the scale of this into perspective, Samsung and SK Hynix will accelerate the Yongin semiconductor cluster completion by 7 and 12 years, respectively.
Wait, 12 years. Accelerating a massive, highly complex semiconductor cluster by up to 12 years sounds, almost physically impossible.
Yeah, a massive leap.
But, let's assume they managed to build the physical shell that fast. Who is going to run it? You need elite, highly specialized talent for that? If they're building at hyperspeed, how will they incentivize the engineers needed to run it? Here's where it gets really interesting.
Right, because, in the global tech race, you attract that elite talent with equity, specifically restricted stock units, or RSUs. But here's the friction.
Yeah.
The Ministry of Economy and Finance's exclusion of RSU tax incentives from the reform bill leaves Korea's equity compensation framework without KDI-recommended tax deferrals for the 2026 tax year.
Let me just pause you there really quick, because we should clarify for anyone listening outside the region that the KDI is the Korea Development Institute, right? The country's leading state think tank.
Exactly.
And they wanted these tax deferrals so engineers wouldn't face massive tax bills before they even have a chance to sell their stock.
Spot on. So without those deferrals, the compensation package is significantly less appealing compared to what a top-tier engineer could get in, say, the U.S. or Taiwan.
Wow. That feels like a glaring contradiction. The government is pushing for hyperspeed infrastructure, yet penalizing the very people meant to operate it. But let's follow the money for a second. If tech talent does manage to realize equity gains despite the tax burden, where does that capital actually flow? Does it get reinvested into the tech ecosystem?
What's fascinating here is, well, it doesn't. 0.7 is the new correlation coefficient between KOSPI gains and Seoul apartment prices, nearly doubling since 2020 as 70% of non-homeowner equity gains flow into real estate.
Wow, a 0.7 correlation is incredibly high. And just as a quick reminder, the KOSPI is Korea's main stock market index.
Right, exactly.
So it's essentially a giant funnel. Any wealth generated in the tech sector doesn't stay in the market to fund new innovation. It just pours straight into Seoul apartments. Why is that happening?
Well, it comes down to a structural lack of alternative investment vehicles, and that's paired with a deep cultural reliance on property as the ultimate safe haven asset.
I see.
Yeah, so when these professionals get a windfall, their primary mechanism for wealth preservation isn't angel investing or holding stocks, it's buying real estate in the capital.
So what does this all mean?
The true test of a structural shift rests on whether today's presidential briefing transforms those 7 to 12-year accelerated chip timelines from aspirational signals into binding financial commitments. Simultaneously, rejecting RSU tax incentives structurally disadvantages Korea in the global war for tech talent against the U.S., Taiwan, and Japan. Ultimately, for global investors, this means any successful tech-driven KOSPI rally will now predictably spill over into Seoul housing markets with a 2-month lag.
That paints a very clear picture of the pipeline, from tech to property. But before we wrap up this deep dive, is there anything else looming on the horizon we should watch?
Yeah, there is one geopolitical wildcard we have to consider from the reporting. If retaliatory U.S.-Iran military exchanges disrupt the Hormuz Strait, will the resulting spike in energy import costs derail Korea's entire accelerated tech infrastructure plan before it begins?
That's today's AI Prism, Front Page Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Won Ifaro award-winning series. We'll be back tomorrow.